Hello traders, Gary Wagner here. It is 12:35 in Honolulu, 6:35 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 5th day of April, 2024, and this is the evening report for gold and silver, our weekend review. Traders, an incredible finish to the day and the week, with tremendous rises in both gold and silver, taking gold to a new all-time record high. Gold gained $38.70, 1.68% in June futures, taking that most active contract to $2,349.10. At the same time, spot gold had a tremendous rise, $38.67, approximately the same move we saw in futures, 1.69%, taking an ounce of spot gold to $2,339.57. As we have seen over the last two trading days, the dollar has remained relatively neutral both yesterday as well as today. Today's gains are 0.06%. Again, I'm putting that in essence in the unchanged column, taking the dollar index to 104.357. Lastly, silver, and as we have seen, it tends to outperform gold in terms of percentage gains on the way up and have larger drawdowns on periods of correction. Silver gained 57.5 cents. That's a rise of 2.13%. Taking the most active July contract to $27.60. We are looking at a 4-hour Japanese candlestick chart of gold. We did raise our stops tight to $2,298.30. In gold today, there was over a $50 range. And because we trade futures, one of the key elements that we have to hone in on is risk management. Because there is so much leverage, we are able to take out tremendous profits from a much smaller move in gold. We bought June gold at $2,198.70. We sold it for $2,298.30, yielding a profit of $9,960 per Comex contract on a trade that took us just about 2 weeks. And traders, because of the great leverage, great risk, and great reward, we are never looking to buy the bottom nor sell the top. We are simply looking to take a percentage of the move. If we take 30 to 50% out of a move as great as what we've witnessed, I am quite satisfied, and we are looking to re-enter the market on any dip that occurs next week because we are still exceedingly bullish on both gold and silver. The historical gains that we have witnessed just in the last 3 weeks have been phenomenal, considering that gold was trading at about 1900 back in October, meaning that gold has gained not only about $445 since October. The question of where it could go becomes more difficult because as a market technician, we have no data that indicates price points in which gold could find resistance. Historically, we have never been at this price point before. One of the only techniques we can use is called a Fibonacci extension, and this is a long-term view of the markets going back to 2019. These lows that come in at around 1,500 up until the former all-time record high at 2,300. When we go to the conclusion of the correction and plot where gold could go to, the 61.8% is $2,271. We've already exceeded that. So our next target would have to be just above 2,400. The 78.6% at 2,402, and a 1-to-1 relationship, meaning looking at the price move in this rally to the current price move would take gold above $2,500. Obviously, traders, when I did my Outlook 2024 and look for $2,300 in terms of a ending price or a high price in gold, I certainly underestimated. That estimate was tepid at best, and myself as well as many gold analysts have had to revise their upside target, as I am doing now. And traders, one of the issues when using a continuous contract is they add the contango, the carrying charge and the differential, when they look at historical data to get those unrealistic highs that were never there in spot gold. We are looking at a spot gold chart. This, of course, is just a daily chart. We're starting from the October rally with gold at $1,809 up to the high of $21.41. That high occurred over the weekend and sold off as quickly as it moved higher. And then we begin our extension just shy of $2,000 at $1,984.99. The bottom or conclusion of this compression triangle. And when we chart that, we have already exceeded the one-to-one relationship, and the 1.236% Fibonacci extension comes in at around 2,400, which is where I think the upside in terms of spot gold could be throughout this year and into the first quarter of 2025. In other words, I think that there's a tremendous amount of room still available, approximately $200 that gold could rise over the next 10 months. Silver is a much more simple process in terms of calculating the potential upside available, because unlike gold, it is not traded to multiple new record highs. It has stalled at $30 to $32 after hitting $50 on 2 occasions, but this was a decade ago. So we are starting at these lows that came in 2020 when silver was trading at about $14.25 per ounce, up to these highs that came in at about $32.50. And when we do that, we can see that the next resistance level in silver will come in around $28 per ounce. It is based upon this top here, as well as the 23.6% fib retracement from this data set. When we do that, a move above $28, and there really isn't any resistance till approximately $30 to about $31 in terms of closing and opening prices on a weekly chart for silver. So there is still the potential for silver to move much higher than current pricing. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you after the weekend for the next daily update and review. Have a great weekend. Bye-bye.